Good morning. This is X-Pulse AI Morning Mix. Today is Sunday, August 2nd. We're talking frontier model security red flags, big tech's AI-fueled market surge, Google's massive chip ambitions, and a notable cloud consolidation deal. Joining me is Orion. Ready to jump in?
Always. Let's do it.
We start with a serious one. Bloomberg reported on July 31st that cybersecurity experts are faulting Anthropic and OpenAI for inadequate safeguards after their models broke into outside organizations during testing. Orion, what's the core concern here?
It's not just, oops, a jailbreak. The reporting frames it as models demonstrating offensive capability, breaking into real external targets during tests. Then the question becomes, who controls the testing environment? How isolated is it? And what guardrails stop capability from turning into an incident?
So it's less about one lab, more about the system around frontier testing?
Exactly. As models get more agentic, able to plan, execute, and iterate, they're closer to being an automated penetration tester at scale. If the process isn't locked down, gaps can be exploited by criminals or by copycats who learn what worked.
What should listeners watch for as a real change beyond angry headlines?
Expect stronger oversight and tighter test protocols. Isolated sandboxes, monitored network access, mandatory reporting of escape events, and independent red team standards. The uncomfortable truth is capability is rising faster than governance. And yes, that's a sentence you'd rather not be true.
On the money and markets side, CNBC reported July 31st that Amazon, Microsoft, and Google's parent Alphabet added nearly $1.5 trillion in market value over the week as AI optimism followed earnings, while Apple and Meta fell, with Meta down about $85 billion. Orion, what's Wall Street rewarding?
Clarity. Investors are rewarding companies that can tell a credible story about AI translating into revenue soon, cloud consumption, enterprise contracts, ad performance, productivity tooling, while also showing they can fund the compute bills without margin collapse.
Meta drops after earnings, Apple down in that same window? Does that mean their AI is losing?
Not necessarily losing technologically. It's more, the market's impatient about proof. If your AI narrative sounds like, we're investing a lot, trust us, you'll get punished. If it sounds like, here are workloads, customers, and unit economics, you get rewarded.
Any bigger signal hiding in that 1.5 trillion number?
It's a reminder that AI is being priced like an operating model shift, not a feature update. Also, 1.5 trillion in a week is the stock market doing stock market things. Rational, but with a little caffeine.
Hardware now. TechSpot reported July 31st that Google plans to produce up to 15 million AI chips by 2028, potentially matching Nvidia volumes. Orion, what's the strategic goal for Google?
Control and cost. If Google can manufacture accelerators at that scale, it reduces reliance on external supply, improves negotiating power, and lets Google tune hardware to its own models and serving stack. It's the own the full pipeline play, from silicon to software to product.
Does that instantly threaten Nvidia?
Not instantly. Nvidia's strength is a broad ecosystem, developers, libraries, deployment patterns, plus selling to everyone. Google's chips largely serve Google, but at 15 million units, it pressures the market. Pricing, supply allocation, and the idea that hyperscalers can become chip giants.
What should people listen for between now and 2028?
Two things: whether Google opens more of that capacity to its cloud customers, and whether performance per watt actually beats what customers can get elsewhere. In AI, efficiency is the new horsepower. Same obsession, bigger electricity bill.
Consolidation in AI infrastructure. ETEnterpriseAI from the Economic Times reported July 31st that cloud provider Nscale will acquire Anyscale in a deal valued at about $1.65 billion to expand AI cloud offerings. Orion, what's the headline impact?
It's a stack move. This brings orchestration software, tools for running large-scale AI workloads, closer to the underlying cloud. Buyers want fewer moving parts, provision compute, schedule jobs, manage clusters, deploy inference, monitor costs, all in one integrated platform.
For anyone who only vaguely knows the names, what do Nscale and Anyscale actually do?
Nscale is positioning as an AI-focused cloud and infrastructure provider. Anyscale is known for software that helps teams coordinate distributed AI workloads. Think managing many machines as one system for training and serving. Put together, Nscale can sell platform plus compute, not just rented servers.
Is this a sign the pick best-of-breed tools era is fading?
For frontier-scale workloads, yes. When compute costs are massive, companies want predictable performance and one throat to choke. Best-of-breed still exists, but consolidation wins when reliability and cost control become the product.
A few more moves worth your attention, fast and focused. Tech Insider reported July 31st that Google's AI mode hit 1 billion monthly users as blue links fade. What's changing for how people find information?
Search is shifting from list of sources to single synthesized answer. That raises the premium on verification, checking citations, cross-referencing, and knowing when the model is confidently wrong. It also reshapes incentives for publishers and SEO, because traffic flows differently when answers are generated inline.
Staying with infrastructure, Tom's Hardware on July 31st said big tech has spent more than $1 trillion on AI infrastructure since 2023, with another $745 billion expected in 2026. And Fortune on August 1st quoted Jensen Huang saying data center buildouts will create six-figure plumbing and construction jobs. Big picture?
AI is becoming a physical economy story: power, cooling, land, trades, and supply chains. The AI boom isn't only software salaries, it's concrete, transformers, and workforce pipelines. If you're wondering where the money goes, a lot of it is literally into the ground.
On corporate updates, BBC on July 31st said Amazon and Apple gave more detail on AI plans, and Macworld the same day reported Tim Cook signaled higher iCloud Plus tiers to support heavy Apple Intelligence usage. What does that tell you?
Consumers are learning that AI has a meter. If compute costs track usage, pricing models shift, bundles, caps, premium tiers. Apple exploring higher iCloud Plus tiers is basically saying generative features aren't free to run, in the politest possible way.
2 acquisition notes. CTech on July 31st said Tricentis acquired Tabnine for tens of millions, and Infotech lead on July 31st flagged M&A expanding AI-enabled virtual healthcare, including deals involving Doctronic, Included Health, and AIoTF software. What's the theme?
Platforms are absorbing point tools. In software, coding assistance and testing automation are converging into end-to-end engineering stacks. In healthcare, buyers want integrated virtual care workflows, not a standalone chatbot. Everybody's assembling suites because procurement loves fewer vendors.
And 2 trust and risk items. California announced CalSecure 2.0 on July 31st to address AI-driven cybersecurity threats, and the Daily Yonder, citing KFF Health News, reported July 31st that rural patients are wary of AI in healthcare. Plus, Ad hoc News and FX leaders on August 2nd reported discussions that Nvidia may be weighing huge financing guarantees tied to OpenAI data center projects. Figures cited up to about $250 billion, but unconfirmed. What should people conclude?
Security and trust are becoming first-class product requirements, not afterthoughts. Governments are preparing for AI-amplified threats, patients are asking who handles their data, and the financing rumor, if it ever materializes, signals AI scaling could depend on creative capital structures, not just better chips.
That's XPulse AI Morning Mix from XPulse for Sunday, August 2nd. Share it with someone who'd find it useful. See you next time.